Hey folks, Vic here with your weekly trade video for Friday, January the 23rd of 2026. You know, a lot of traders think that scalping and swing trading are two, completely different worlds. Well, they're not actually when it comes to analysis. What if the same analysis that works on higher time frames could give you cleaner, more controlled scalp entries? Well, that same analysis can definitely give you that. So Darko was asked by Darko, by the way, is our lead coach. He was asked by one of our members if he would do a scalping video showing how to apply the swing trading approach to scalping. So in today's video, Darko breaks down exactly how he applies his longer term price action based approach to scalping. And it uses the same structure, the same context, the same candlestick logic and all that. No gimmicks or no indicators at all, just clear market reasoning and logic compressed into scalp trades. So if you prefer short-term trading but you want higher quality setups, this is how you do it. And so just before we get to the video, just a reminder that next Tuesday, January the 27th at 3 p.m. Eastern Time, that's New York time, Darko and I will be hosting a webinar where we will go through the details of our trade alert service that Darko is now providing. You'll see exactly what this service entails. So, and we'll answer all your questions, whatever you have on your mind. So be sure to register for it, even if you can't attend live, and we'll send you the recording. There's a link to join the webinar in the text below this video or in the email that you received. Okay, here is Darko to explain how to apply swing trading rules for scalping.
Hi everyone, Darko here for a scalping PMA for Monday the 19th of January 2026. Hope you have a great weekend. I got a request from one of my clients to do a PMA and explaining the stuff around the game plan that I posted. So the purpose of this PMA is to give you my thinking process about, like, if I was a scalper, how would I scalp it in order to make consistent money in the market. So you don't need to agree with me on what I'm saying, and this is my idea because this is how I am doing the long-term service. So I'm just scaling down the time frames and the thinking process, and hopefully this PMA will help you to sort out the basics. And obviously if you have a method or a system that is actually making you money on a consistent basis, you should not be changing anything. So if you are a struggling trader and you want to have some guidance, guidelines about like how to approach the scalping mentality, and then hopefully this PMA will help you. So the game plan is obviously I won't be covering micro scalping. I'm just covering scalping, and then you can just scale that down to the micro scalping if you are that that type of trader. So the reason why I'm having the weekly chart is we need to have a bigger picture, context. What is the bigger picture doing? And I will also show you on the chart what that means. Like a weekly chart for a scalper is super important for that specific week. And what we do in the long-term service is that we waiting for a decisive candle action. And the reason why I'm doing this the way I'm doing it is that I am narrowing things down. So there is a broader way of trading where you don't need to wait for the fixed, like in this case 4-hour candle or a daily candle. You don't need to wait for that if you want to have a broader approach, and you have to be okay with more losing trade. But if you are doing things correctly in a long run, you will have consistent results anyway. What I do is that me as a person is that I want to narrow things down. I'm completely okay for not having trades for certain days or maybe even a week. For the long-term approach, I'm mainly swing trading. But the trades that I get, then I know that there are way more higher probabilities around these trades by narrowing things down. So this is optional. You don't need to, but I'm doing it. Okay. So that's the weekly time frame for the bigger picture only. Obviously you won't be trading weekly support and resistance and time that on a 15-minute now. This is only for the bigger picture. Okay, daily and 4-hour is the most important. All time frames have their own importance when you are using it properly, but daily and 4-hour is that where you identify trend. That's super important. If is price trending, one of the biggest mistakes we do as a struggling trader is we don't know, like we are trading everything. There is no trend, there is no momentum. Okay, but also key levels of support and resistance. Geez, there are necklines all over the place. How would you know which neckline do I trust? Because if you mark every single one of them, and then you see a swing break or a structure damage, it's the same thing. How do you know what to wait for? And to solving the remedy of that issue is only trading identical necklines in the beginning of your process when you are a stage 1, stage 2 trader. Because you have to understand that trading, it doesn't matter how many game plans I give you, I produce, or checklists. I'm very allergic to checklists and such. This is just like a brief, game plan. I'm not writing down context in the game plan. If I would be doing that, then the game plan would be like over 100 pages. So just like guidelines, what I'm looking at, what I'm waiting for. So support and resistance is important. But the thing that people think, and there's a huge misconception about trading, is that if you only were an expert drawing key levels of support and resistance, you will make consistent money. I can tell you, and you have to believe me in what I'm trying to tell you, because I have 20 years of evidence, and obviously I assume that you have been listening to my podcast, is that there are 9 parts of trading. I added correlation to my, the trading circle. Okay, every single one of these 9 steps or 9 things needs to be mastered 100%. Swing break, or structure damage, whatever you want to call it. Let's just say swing break is completely useless if you don't put that in context. Like if the market is trending up and you are seeing a bearish swing break and there is not at a key level of support and resistance, and you have no idea who is in control, or if price is correcting or continuing on your higher time frame, swing break is useless. Same goes for support and resistance. If you don't know what the bigger picture is doing, you can go ahead and draw the best support and resistance you find on your chart, like one of the best ever made in charts history. This is completely useless if you don't see what's happening on a bigger picture. If price is trending down and you find support somewhere, that level will be destroyed like if it wasn't even existed. Okay? So the pattern itself is useless. Support and resistance is everything cannot be traded in isolation, and that is something that I had very hard time mastering. Like, geez, I'm super great at finding key levels. I'm trading identical necklines, and I see my pattern. It's just like everything is so perfect. Why am I still losing? And the reason for that is that putting everything together and have the more you narrow down things to a certain point, obviously, then it becomes ridiculous. There's a threshold when it's perfectly narrowed down, and then when you are taking it to the next step where you are actually afraid of pulling the trigger, so you are just finding excuses to not enter the market. That's a different thing, okay? So having a healthy narrowing things down for your trading, and just do one thing, only one approach, one thing and you do it in a certain robotic way. Every single morning you wake up, you read your game plan. You can certainly copy this if you want, but make it your own, and you read it. I'm after 20 years, I'm still waking up every single morning. The first thing I do is I read what I'm about to search for, and then I spend a couple of minutes visualizing in my head to put myself in a certain state of mind when I only look for one thing. And the sooner you accept this, the sooner you will become a consistent, profitable trader. This is super, super important. And obviously, the 15-minute chart is your entry. That's where you want to see structure damage or swing break, okay, before entering, because then you know who is in control when you are entering that trade and putting everything in context. Context is something that I will emphasize every single time whenever I'm recording something or talking to any traders. And context, you have to be okay that context will take you the longest time. Understanding a swing break, I can teach you that in 10 minutes. Finding support and resistance, key levels, I can teach you that in 15 minutes. Identifying trend, the same thing. Okay, but if that's the case, why are people struggling after 1 year or 2 years, or some people even for 5 years? If this takes you like 5 minutes to understand, or at least let's just say without exaggeration, it will take you like 1 hour or 1 day. I don't care. You get my point. Like if these, this is the easy part of trading. Like waiting for a 4-hour candle action is the easy part. Understanding support and resistance is no brainer. Okay, who is in control? That's understandable. But why are people still struggling with their trading for many, many years? The reason for it is context, have the ability to put everything together and understand that there is no black or white thing in trading. It's more like an artistic mindset, and that comes after you pass level 3 of trading, like stage 3 of trading. Okay? So waiting for a decisive candle action, it's not mandatory. Like I said, I narrow things down. So I am waiting right now for that extra confirmation. The only time I'm not waiting for it is when we have 2 time frames trending. In your case, daily and 4-hour, okay, is trending. Then there is no need to wait for an extra confirmation. The reason for it is the market has been a nightmare like last year, and there are so many uncertainties. So I want to, I rather be safe than sorry by giving myself that extra layer of confirmation to feel confident to pull the trigger, because otherwise there will be trading mental issues like moving stops and not trusting your system, being nervous when price goes against you, all the chasing price, revenge trading, all of that things comes with because of uncertainty, because you do not understand what price is trying to tell you, and you don't understand the system you are trading. I don't care whose system you are trading. It's very important for you to actually understand why that is working. Like, why is that working? Once you understand it and you do the baby steps in the right direction, along the way you start building conviction. You will be convinced that this is the way of trading, and you don't jump system because now you understand why your system is working. Okay, so I won't be covering the micro scalping. It's just like scaling down the time frames. I won't be covering all 29 pairs because I rather cover a handful of pairs and explain my thinking process in great detail, and just keep it basic and great, to a level. The great is that you actually understand the concept, and then you can do this on your own on any trading instrument that you are actually trading. Okay, so this is the weekly chart, and this is important to understand what is like. By the time you do this, let's say you do this over the weekend, the market is closed, you need to know what is my bias for this coming week, this trading week that is coming, opening 19th of January, okay, until Friday. What is what would the weekly candle be? Okay, and then you decide, okay, like if something is decisively bearish or bullish, and you put that in context, then you have an idea. If that's like 100% bullish, makes sense in the context, then longing opportunity is your only option for this coming week. Okay, so the weekly candle decides what mindset you should have for that week. Okay, and the next problem is when you are a struggling trader, you want to be in the trend, against the trend, trading every micro levels in the middle of the channel and in the middle of nowhere, because you cannot just be okay that as a scalper you might have maybe a handful of trades for the entire week, but those are perfectly in alignment with everything, and those are high probability trades. Okay, so in this specific case, we need to understand that Aussie CAD is at weekly swing neckline resistance, and we also have an inside bar. Okay, obviously I assume that you are going through the content, you have a perfect understanding for my 7 candlestick formations, which are phenomenal in the market. They are, producing miracles almost every single day. So inside bar at resistance, that is usually, not always, a reversal. Okay, but the thing is that you as a trader, you don't need to know if this is actually breaking to the upside or breaking to the downside in order to make money. And that's just like, hey Darko, what do you think? Or I have no idea. Nobody does. Neither you, me, Vic, or Warren Buffett. Nobody knows. We deal with probabilities. Okay, so if that's the case, okay, so price we and then, is price correcting or in a continuation mode? Well, price was in a continuation mode. This could be a potential reversal back into support. Could be. Obviously, price could very well be breaking this channel and then retest for upside. And this is where I mean that you don't need to know. Why? Because if this happens, then you will be longing this level. By waiting for the daily correct down into this level, then you know that we are in a correction on a daily and 4 hour. By the time price comes into this level, and you also have prices trending up, okay, then there is no need for an extra confirmation in case you have a natural stop that you are okay with. This is how it will be looking like on your entry time frame. Okay, price will be touching this level, coming down maybe into these levels, okay, and then you see a clean breakout. Then you already have that structure damage, because this will be a type 2 swing break then. Okay, a type 2 swing break is when the price is trending, okay, and then on your entry time frame, price is correcting into a level and you have a natural stop that you are okay with. This is something that I drill on consistent basis for my long-term service. Okay, by hearing the same boring, robotic, objective approach, it will give you after a while, I sound like a broken record, and that is a good sign. That means you are leveling up. Then you know exactly what to look for on your charts. But let's say, for example, this is actually retracing. Where are we retracing to? Then you need to zoom out your chart and see, okay, I see this neckline. I see actually several more necklines which is slightly lower. So which one do I take? Well, how would you know where price will be reacting? Would you know if price is reacting from this level or from the lower? Well, we don't know, and we don't need to know, because if price comes down into this level, okay, this neckline on a daily chart, and you go to your 4-hour time frame and see, do I have anything? Let's just see, because I actually had some problem with the lines on TradingView, so I don't show you several numbers. 92.47 is the same on all, perfect. So now we go to the 4-hour time frame and see where is, well, this is an identical neckline. So this is a level. If I was a scalper, I would be watching that level and disregard everything else until price gets there. But right now we are in a channel. You see this in here? And the worst thing you could do as a scalper is to try trade channel, especially putting this in context, because you don't know the breakout. If the channel is bigger, like this channel up in, down in here, and this is the top and this is the bottom, this would be a different story by trading the top or the bottom of the channel. But when the channel is this tight, there is no room between A and B. So there is like, it's not a good idea to be trading anything around these levels until price breaches those levels, because it's a different story between this channel, where there's enough room to let the trade breathe than this narrow channel. Okay, or maybe we are not respecting that identical neckline, because how would you know if that first level, I'm just eyeballing this here, will be holding? Well, if that's the case, if price will be holding that level on your entry time frame, okay, price is moving in waves. Okay, this high is higher than this high, and then we made a higher low. This one is higher than this one, and now we are like, rangy, complex pullbacking, and then we double topped. Okay, and this swing in here took out everything, this one and this one. This one is more important, is because when we left this area, price managed to make a higher high, higher close. This one is like, nah. Okay, because this is just a complex pullbacking, and you need to understand the difference between APB and complex pullback. Okay, and when this happens, 8 times out of 10, price is going up to a certain level of support and resistance, or the 618 fib, and then price is usually not always making another lower low and hopefully a lower low, lower close. Then let's just assume that that level that we draw, that was identical on a daily 4 hour, is in here. We just assume that. Okay, so price is moving in waves. Okay, support and resistance, we go up, touch this level, maybe the neckline, it doesn't matter. Price is waving, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then you see this, because now the sellers are in control, sellers are in control, sellers are in control, and now buyers are in control. Price is telling you that the bulls have been, winning over the bears. And when you are looking for a long opportunity, you need to see who is in control, buyers or sellers. When you are at support, your bias is bullish, you want to evidence. That's why I tell you, you don't need to know, because price will tell you. You need evidence that buyers are taking control over the bears at your level, putting things in context in order to take this trade. Okay? And if you want to wait for that extra layer of confirmation, the reason why candle closing is so important is because, like, a daily candle dictates all the battles between bears and bulls for Tokyo session, London session, New York session. Who won, who was the champion of the day. Okay, and the weekly chart is telling you who was the champion of the week, bulls or bears. Okay, and understanding the context, the correction, continuation, trend, who is in control, the questions that you need to ask yourself before taking the trade, so there will be no misunderstanding, no moving stops, no chasing price, no revenge trading. Treat this as a professional trader. You review your trades, you journal them the way I teach you. It is hard work. That's why trading is not for everyone, because not everyone is passionate to do this properly. They are interested in trading, but they are not passionate about it. So those who are interested in trading, this is just a hobby. In case they make it, they make some money, and almost 100% of them will never ever become a stage 4 trader. But if you do this, in a written down structure, reviewing and journaling your trades are super, super important. Okay, what I was about to say here is that, let's just say that this is the line in the sand, that identical neckline, and the 4 hour is coming down. It could be in any fashion. Okay, it could be something like this, and then the next coming candle is, in this specific case, engulfing the previous one. It's 100% decisive bullish candle action fixed at my level. What does that mean? Because if you don't know what this means, you just think, okay, this is another, shiny object. No. When you see a decisive bullish closed fixed, it's the same thing, candle action at a certain level, and it needs to be 100% decisive. That means the institutional money has entered the market, because it's not my account or your account or Vic's account that will generate in candlesticks like this. Okay? These are institutional market makers. When the candle is fixed, that means, the bulls are completely knocked out. Okay? They are completely dead. And then when you see a structure damage on your entry time frame within this one in here, that is the extra layer of confirmation to avoid the nonsense trade or trades when you are just taking those out of boredom. But do you need to wait for this? No. Like I said, you will have more trades, but you also need to be okay to have more losing trades. Okay? So by understanding this, okay, we have an institutional candle here. We have the market makers. I see structure damage on my entry time frames. The buyers are in control. That's it, guys. There is nothing more to wait for. Okay? Win, lose, draw. By understanding this, you can take 3 full losses in a row and you won't be offended. You won't be upset. That doesn't mean that my system is not working. That doesn't mean what I'm trying to tell you in this PMA is BS. No. In trading, you will be right, I would say 50% of the time. Maybe if you are a monster, somewhere between like 60, and I mean you are taking it from the 1st of January to last of December, and you average everything, your win rate, it will be somewhere between 50 to 60%. And now you are a monster in this business. You will never, ever, regardless how smart you are, how good you did in school, how much you have outsmarted me and the market, you will never be right 9 times out of 10. So that is, another 21-year-old guru on TikTok that tells you that he or she has a 99% win ratio, and they will tell you how to turn $1,000 account into $10,000 account in 60 minutes. I'm not making this up. I'm actually, seeing this on social media. So by having that mindset, nothing will work for you, and that's why you jump system. But once you understand the concept that I'm trying to teach you, all the 9 important part of trading that is 100% important for your development, and you take your time, like give me 1 year. What is 1 year of your life? And if you have been with me for several years and you don't see results, why is that? We have to be honest with ourselves. Okay, I'm not here to people to feed my ego or anything. So I'm just trying to help you. So if this doesn't make sense to you, I won't be arguing with you in the chat room. I don't have time for that. Okay? So the sooner you understand this, the sooner you will be doing way more better than you are actually doing right now. Okay? Some other things that I want to show you in here that is super important for you to understand. There are 3 pairs that you need to master, in front of each week before you start trading. The most important part, not the most important, but one of the most important part of trading is correlation. Most people don't understand this properly. So to understand correlation perfectly, there are 3 pairs that you need to master before you start your trading for the week. Okay? And this is super, super important. Dollar index is the most important index that you need to master. This is dictating anything that is correlated with dollar, and anything with dollar in it, like euro, Swissy, pound, Aussie, Kiwi, etc., etc. Super, super important. Okay? And euro pound is telling you, like, if you watch the weekly candle action and you do your analysis properly, you need to know which one is stronger than the other. And this will be changing, every day, week, month. So you have to do this on a regular basis. Because if euro is way, way more stronger than pound, okay, and let's just say dollar index indicates a full drop this week. I'm just making this up just to illustrate this example. If dollar index is indicating that it will be dropping for this week, that's my game plan, or that's the probability. So if this is dropping, that means euro and pound will be heading up. Okay, but if you recognize that euro is way stronger than pound, then you only trade euro US dollar long. That will give you most amount of pips. That's when you see that clean move and you are kicking yourself for not taking it. Okay, then you go to Aussie Kiwi. You might see that Aussie is way stronger than Kiwi. Okay, then Aussie dollar is a way better option to be trading when dollar index is heading down than Kiwi dollar. Okay, and if you go and backtest this, do it properly, you'll be amazed how this will be saving you from lots of bad trades. Then you don't need to risk expose, because you are only trading, the strongest one. And obviously it's opposite for the short. If dollar index indicating heading up, then if that's the case, then pound would be better to short because it's weaker than euro US dollar. Okay, that's why when you see one pair is flying away and the trade you took is just like ranging, it's just going nowhere, it's because of the correlation. Okay, super important, because the important part of trading is you always need to trade strong versus weak. Okay, strong versus weak. And yeah, this is a bit more advanced trading mindset, but this is the thing with trading. There is a level where you can simplify things to a certain level. I try to make my coaching and trading as simple as possible, but if I pass this threshold, it becomes nonsense, because then I just don't know how to tell you, like, why is this heading up or why is this ranging, if you don't understand all parts of trading. And that's why if you skip chasing systems, trading 12 patterns, 6 trading styles from micro scalping to investing, if you just do one thing, then the remaining time you are educating yourself to understand these 9 parts of trading in order to stay consistent in the market. Okay, let's see if we can do. I see the clock is ticking, but I enjoy recording these to give you a better understanding for how a trading needs to be done, in my opinion. And there are a million ways of making money in the market. This is only one way of them. So this is not like this approach or the highway. No. So this is Aussie Swissy. The weekly candle action is bullish to neutral. We are at level of resistance, but if you zoom out, this is overall heading down. Okay, so we need to see who is in control. Price is at resistance. Unfortunately, this is not decisive, and price is micro retracing. This is more like a difficult pair to monitor right now unless we see what's happening. So let's just move to the next one. So this is an interesting pair. Okay, the weekly candle action, this is 100% bearish, a weaker version due to the color. That means this is bearish, but it's blue. That means it closed on the blue side, like above the opening price, but it is still bearish, but in an uptrend. Okay, this is super important to understand. This has been heading up since April last year, but we do have a bearish candle action. So technically speaking, having the uptrend, strong momentum up in the back of your head, shorting should be your first option unless price retraces back to a legit level of support. Could be like a level like this. Okay, because the buyers are still in control despite this micro correction. How do I see that? Keep it simple and basic. Okay, higher low, higher high, higher close. Okay, this, just by eyeballing it, since looks like this is higher than this one marginally, and then we broke this level, this swing in here, that means on my daily chart buyers are in control. On my 4-hour time frame, sellers are in control. Now you have a problem because the daily chart is conflicting with the 4-hour. Daily is stronger than 4-hour, 4-hour is stronger than 15 minutes, and obviously the weekly is stronger than the daily. So I would, when that happens, usually, not always, price might be retracing into a daily level. Unless we breach this level on a daily chart, the trend is intact. So price could very well be reacting from this level, or more likely coming down to the next level. And then if this happens, like if the daily candle comes down in here, okay, then the 4-hour time frame will be looking like it's the end of the world. It's like super bearish. Okay, super bearish. But what if, this is just a scenario, what if the next coming 4-hour candle will be engulfing the previous one, where you see clearly at a key level of support, the institutional buyers are in control, and you happen to see on your entry time frame something like this. Okay, where this low is lower than this low, and this high is taking out the previous high, and things make sense in context. And then you have the confidence to take this trade. It might take a while, and you have to be okay to not have like 3 million trades every 5 seconds. Just because you are a scalper, that doesn't mean that you have trades every hour or every day. No. Or the second scenario is, okay, the weekly candle action is bearish, and daily Friday close super bearish. So if the market, I'm just making this up for the sake of the example, price opens in here on Monday or Sunday evening and then goes up, okay, it retests this level and then close another bearish candle action. So by visualizing this, how can I convert this move, the daily move where price is heading up, retesting a newborn neckline that we see on regular basis, like, it's not the first time we hear this, and then closes bearish? If that happens, how can I make money out of this? Because this is an entire daily candle, and that's super great for you as a scalper to have that information. Okay, then the 4-hour time frame will be like slightly bullish, and then this candle action might be doing something like this. Okay, price is heading up to retest that, because if this happens, this is how the 4-hour time frame will be looking like. Okay, and now we have a decisive bearish 4-hour candle action fixed at a key level of resistance on a 4-hour time frame. It happens to be the newborn neckline on the daily chart, and on my entry time frame I do see this. Do you start seeing the context, the matrix, the whole, I wouldn't say that the holy grail, that would be an exaggeration, but understanding the fractal of the market. You start to visualize something, you start to understand it, you start to writing down, taking screenshots of, okay, this is what I will be looking for. Now it's a waiting game. Then it doesn't matter if price happens to come down into this perfect level, or if price goes up into this level. Why would you care? You will be making money either way. So that's why what I'm telling you is that you don't need to know if price will be heading here or here first. We couldn't care less. Okay, we couldn't care less. We just have a bias combining different time frames for different purposes, and then we are just waiting. Trading is 90% waiting. Don't feel bad, because in real life you have to do something in order to get paid. In trading it's the opposite. The less you do, the more you get paid. Okay, so I think almost 40 minutes of PMA is enough for this time. And my intention is not to confuse you or making things harder for you. My entire goal with this service, I'm obviously more active for the long-term service than the short-term service. The entire idea with me and Vix running this service is trying to help you. So the adjustments that has been made, at least for my long-term service, I'm trying to not change anything, but sometimes things needs to be adjusted for the current market conditions. It would be a different story, like if I start teaching you supply and demands or Gartley's or bat pattern or cipher or shark, wherever these fancy names. That is a different story. But if I'm still pure price action trading and the market has changed since Corona and I need to find a way to survive this market condition, then it's my responsibility as a trading coach to do the adjustments needed to save my team from disaster. So if you feel like I'm changing back and forth that's not true, okay? Because what was exactly the same 5 years ago that it is today? Everything changes, and we need to change with it and do the adjustments needed in order to stay consistent in the market. And obviously, my long-term service, whatever I drill, we have been doing it. I'm trading live in front of my clients, telling them everything I do on my live account without showing you my live account. I'm teaching every single step. We are drilling this on regular basis to have a better understanding how the current market condition works. Okay, and obviously, speaking of fact, we have winning months after winning months. Yes, once a year we have a losing month. I never had 2 losing months in a year, and everything is pre-recorded. There is no hindsight. Everything is perfectly in advance for you to understand and see things before they happen. Because pointing things out and telling you to long this, short this, long this, short this won't make you a trader. Okay? I hope that you find this PMA helpful. And I will obviously read the comments in the chat room if you type any. And like I said, I have zero interest to argue with you. If you have legit questions connected to this one, feel free to ask that in the chat room and I will at some point get back to you. Okay? Thank you so much for listening, and I will speak to you soon. Cheers.
Okay, so if this changes how you look at scalping, that's not an accident. This is what happens when you stop chasing scalp strategies and you're not sure what to look for when you open your charts and you start understanding how price actually moves regardless of the time frame. So if you want to learn this kind of thinking properly with structure, with rules and real feedback, then this is a great approach to model after. And as you saw, Darko showed you his game plan for scalping. So that's a template that you could use to follow. All right, and if this video helped you, like it, subscribe it, and let us know in the comments what time frame you trade the most. I'd be interested to know. Thanks, everyone. Hope you all have a great weekend and trading week ahead. All the best. Take care.